Get live. Everybody, hi. How's it going? Hope you're doing fine. We're going to look at the charts, discuss the market. Uh, Let me open my charts. Okay. All right. How everybody's doing? Everybody's blaming the war in the Middle East, right, for what is going with Bitcoin. Yeah, I mean, sometimes local events can affect the price for sure. Um, so let's look at all this. Okay. By the way, I was listening to the space that they had yesterday on Dr. Kruger. Yeah, it was a Dr. Kruger space, right? One of the space where I think there were like 6,000 people participating. For some reason, I think I was busy with somebody, something else, because it would have been much more interesting if I was almost glad I was not there, because other people had the chance to talk about the power law, and sometimes you just hear it from me, and I will have probably dominated the space in the sense that I will not the other people that work on the power law, like Plan C, for example, right? Um, I, I explained the power law to Plan C. He contacted me the first time several months ago. Then he became a good force um, for the power law, because he's doing good job in analyzing, etc. I was very proud of him because he seems to understand it very well. He was able to handle many of the questions that we were given. In particular, is he had a confrontation with Joe Carlassare. I call him Carlassare because that's how we will pronounce it in Italy, with two S's. And he's a great guy. I met him actually in Nashville. Sorry for this little rant before we got and analyze the market, but it's kind of interesting. I met him at Nashville, and when you meet people at conference, that is the coolest thing, right? It doesn't matter if you had argument before, if you were fighting over something, you became immediately friends. The first thing we did, we hug each other. He's that tall guy, very, very nice guy, very friendly, very great guy. And then I'm sure, I don't know if I will ever meet Plan B. It's the same thing happens. I don't know. It's a different thing. I mean, it's a entire different world. But he's a lawyer. I think he likes to debate people and argue with people just for the sake of it. I'm sincerely thinking that at this point, that is the best interpretation of it I have. But I'm listening to the space little by little, because I want also to understand what people concerns are about the power law. In fact, please use this opportunity for me to interact with you by asking questions. It doesn't have to be on the market; it could be general power law questions. Every time we have these sessions, I can always stay a little bit longer and answer anybody's questions, concern, doubt. So if you have them, please ask them. The problem, when somebody comes in like a Joe with his very lawyer law voice, like that, because it's all what they do. Like I'm sorry to put down the lawyer profession, because I'm sure there are wonderful lawyers, so they are human beings, but are also. It's not true. It's not true that are all shark guys. It's not true. Okay, some of them are also human beings. Some of them, right? Joe probably is one of them. It's one of the few human beings lawyers, but I'm sure also you, that you're listening, you're a lawyer, you're a human being. But we know that a big number, let's say, it's sharks, really sharks. It's another alien. I just posted. I had this lawyer partner. We opened a restaurant together with my family, and he took advantage of us, right? But I got to understand how they operate. I don't know if they do in Italy. I imagine so. Um, we have even like a popular lawyer figure in Italian literature that is called Azzecca Garbugli. That means he catches knots, right? He catches knots all over the place. He creates problems as he goes, because he needs problem to work. Um, but yeah, he told me once. He told me, how we do lawsuit, Giovanni. He was trying to explain me the subtlety of laws, right? Say we write these lawsuits and we hear to our clients, what we have to say, the situation, we study what the relevant facts about the matter, and then we just make a bunch of bullshit. Hopefully we don't demonetize this for this word, but we make a bunch of stuff. We take it, we put it in the lawsuit. More it is, better it is, because the other lawyer will have to answer everything. So they spend a lot of money to answer all the stuff that we put in the lawsuit, and we throw it anyway because the judge or the jury, some of this stuff will stick, even if it is not true. It will stick, and if it sticks, we can have a winning point. Well, science doesn't work like that, Unfortunately, it doesn't work like that at all. It's the opposite of how it looks. So I don't know. The guy said a bunch of crazy stuff, like power laws have been all the historical, and I will stop here. All the historical power laws, all the different power laws that have been discovered. In fact, he said exactly this, like in a very lawyer voice and very assured of himself, because these are what you do. From ancient time, orators, right? There is Cicero, for example. He was a very famous Roman lawyer. So he has an entire book or um, big sections of these books about being lawyers. Is about how good of an orator you need to be, because it's all about winning argument through debate, not truth, finding the truth of what is real, what is not real. So much convincing you are, right? So he comes in with his voice, and then it says things like all the power laws historically have been broken. I say so, all these use cases, scenarios that we have been whatever it is that they say in court. Um, yeah, okay, sure. Like, let's see, the Kepler's law, that describe how planets move around the sun, has been broken. I didn't know about that. Forget about Tehran. Let's focus on this, because the Earth is going to leave a sun very soon. Given that it's broken. Or like how the temperature of the sun is related to its luminosity, how much light is emitting, that goes with the power of a fourth power of a temperature. Is a power law. That one is also broken, as according to Joe. And so it's a very worrisome thing, because who knows what happened to the sun. Very soon is going to turn off, right? Because it's very hot. But given that the law is broken, we don't know. It's all, who knows what happens to it. And like 80-90% of the laws of the universe that are power laws are all broken, according to him. It's completely crazy and ridiculous, right? And even if you mean power laws in society, that I'm sure he doesn't know how to name one, they are not broken. This is why we have a name for it. We came up with this term called scale invariant. What do you think invariant means? It doesn't change, right? At least in science. Maybe in legalism means the opposite, what it means in real world. But okay, so if it is called invariant, it means it doesn't change. And they came up with that term because they all break eventually. So they came up with this very opposite term of what invariant means. It's crazy. It's crazy. But anyway, let's move on. And if you have any questions, I can answer the question later. I mentioned these things mostly because it represents a certain number of people in the community. They interact with this knowledge. Instead of going deeper, I give all the time, right? I'm very generous with my time. I have videos about scaling. We made so much learning material, and people don't go and dive in and then have a serious discussion about the science, what it means, what are the interpretation. They just say stuff, I don't understand it. I don't get it. Anyway, so we have all these indicators. Our main indicator is this one, right, which is the power law in time. It unfortunately, like I say, it's not the easiest thing to show Bitcoin as a log chart. You can do it. Here it is, and it looks as straight as ever to me. Um, but it requires to create an additional axis and so on. It's not the most natural way to do it. And the chart has some limitation because of it. It's kind of cool to look at, but it's not the most natural thing for trading view to show the log of the time and the log of the price. Those naturally does the log of the price. It doesn't do the look of the time. You have to find, code it and do works around to do that. It looks cool, right? It looks beautiful. I don't know why somebody will not want Bitcoin to work so regularly and so powerfully like here. But you can use all the math, all the equations, and then plot it in a log linear chart, and it will look like, what we are already familiar with is this curve, right? The curve, by the way, never tapers off. There is also some discussion right now on X about will Bitcoin ever taper off? And we can have the discussion later or maybe in a separate video. Right now, it's not tapering off. It's a nice straight power law. So this is the white one is the power law. I drew a line that represent the support. That is about, you can find it many different ways. We are converging. These are some of, because we are always discovering, always exploring new things. So it seems that this support line, which is like one of the most fundamental and powerful things about the power law, is that it seems that it works. It has been working for all the history of Bitcoin. You see, it represents some kind of floor. And see, differently from the laws of nature, where even a small infraction of Kepler's law will be considered incredible, right? It will be considered where, oh wow, why this happens, and let's find out. Let's go and explore deeper. And it could be worrisome or could be even exciting, because actually scientists like when things are broken, because then we can go there and explore what happened, right? We can maybe get some insights about nature that we didn't have before. But it's never like that with real, let's say, messy things like financial information, right? It's all statistics. But even with statistics, right, you can say that maybe during COVID, there was a little spike where it's actually a confirmation. I was also in the space, I was listening about that. People saying, one guy, again, because they don't understand science, they are not prepared, the fact that it briefly dipped below through a week, basically, not a week, like a period of time, right? A week, like during that day, there was not the closing price, but during the day, the price went slightly below um, that line. And it's an arbitrary line. I could make it 5% smaller and say that is the line, right? It's just a question of, it gives us a point of reference statistically, because everything you want to understand about this asset is not deterministic. It's not 100%. It's all stats, right? Very powerful stats. The stat is that we basically never go below that line. Much more meaningful than people drawing lines by hand and say, oh, this is your support line. What even means, right? This is a real support line. So it gives us always a reference of where we are, right? It is very interesting. Another thing I wanted to tell you in general, besides watching the market and what it's doing right now, how to interpret this behavior with power law, it's through the cycles, all right? Because in one end, the power law tell us there are no bubbles, there are no variation, because these variations, again, statistically, they cancel each other. The bubble up and the bubble down, we cancel each other. See, we leave the power law, we reach a top, and we go back to the power law. So in theory, if you really wanted to have a very high level understanding of what the power law tell us, that We are moving along with power law, and there are no bubbles. Which bubble are you talking about? Which decrease in price you're talking about? We always follow the power law statistically, and that can be shown true by averaging the price. And actually you can also do it using the indicator, because if you go here, you have control of this moving average, and so you can, have a 600-day moving average, right? And you see how the price starts to flatten out. And if you continue to do this over longer and longer period, you will get, I don't know if they allow us to do that. What is 365 times 4? 1,200 for 400 days. Let's see if it works. Okay. If you do this, you're starting to see this straight line, right? And I could draw a power law through it, and it will be almost perfect. Like oscillations are becoming smaller and smaller, and basically the power law, the real price goes through the this power law that will look like almost, with no oscillations at all. It's almost impossible to get rid of this oscillation, because even with a moving average, because they are so big. But one thing you can do is to see with your eyes, right? It's leaving, then going back. So it's basically the overall result of this is like the bubbles do not exist, but they do exist. We are interested in them, and so you can go to this other level and say, okay, now I'm going to use the power law as a way of understanding the cycle. So you describe everything in terms of variations and deviations from the cycle. Okay, so it's a powerful tool to do that. And by the way, I was discussing today with somebody who mentions the Myers multiples. Why do you think it works? Because it's the ratio between the price and a 200 moving average. Exactly what we just showed. The moving average is going to tend to the power law. So basically, we are taking deviations from the power law. This is why everybody was so, before knowing what the power law was, because again, in the space, it was so cool. I wish I was there, because we had all these people say, oh, I believe in, forget the power law. I believe in the Myers multiple. That is something to be, that is a wonder. And I don't know why it works, but it works. Yeah, it works because there is a power law, you fool. Understand stuff, study it. We don't know, and we talk, right? We talk, and but the difference is I spend all my day studying Bitcoin. Anyway, going back to the market, what is going on? Well, it's what is going on is the same thing that I say is going on now for weeks. Basically, the entire year. And let me summarize it one more time, maybe for the people that have not heard this discussion of the market according to the power law. In general, the pattern is very clear, and I think I have a place where I discuss the pattern, and I can share it with you. The pattern that we see every single time. Where it is, many charts. Let's see if I can find it. Okay, this one. So the pattern that we usually see is this, okay? And what did I do here, right? Because this is also a cool chart to look at. I don't think I showed this before in these market reviews, but this is very relevant chart. I should move it closer to the useful chart. So here you see the current situation, right? This is the price, this is the power law, what we call the full model. It is trying to show where the peaks are, where the bottoms are. And I took segments, right? Imagine I take this chunk of data from, basically I go back to wherever we are right now. I go back 4 years. So take wherever we are, you go back 4 years, and that will give you some place, right? Then cut it off from the chart and shift it by 4 years. And the reason, so wherever that point is, so imagine I go back 4 years, it will be somewhere here, right? Somewhere there. And then I take this segment from here, everything, back in the past, and I shift it by 4 years. Why did I do that? Because I want to align the equivalent of 4 years ago with now. Okay, this is what I did. So if you go back 4 years, and the reason why, so it's the reason why is here because remember I shifted. So the time here that you're seeing in the chart only applies to today, right? So this is the correct day. It's not going to be correct for this guy, but subtract 4 years, and it will be that exactly. So instead of being uh, the 25th of November 24, it will be November 20, right? Is what it means. And the reason I did that is because I want to compare place by place using time, using normal time, no block time, no other things. It's the most honest way to do it. The cycles last 4 years, so you compare, right? Because if you start to do things like, oh, I think the cycle lasts, because there are all kind of people that do, and of course, right? Listen to other people if they are enough reasonable, etc. But I want to show you how I do things differently. This is how scientists will do. We will not come with some ad hoc measure. Oh, this cycle lasted this, because we don't have enough information to say this different cycle lasts different times, etc. So we see this. We know that there is the halving. We see this bubble kind of repeating every 4 years. So just make it simple and don't add additional assumptions. Okay, because if you are starting to add additional assumption, you make a model on top of a model on top of a model. That is exactly what science is trying to avoid. So you just say 4 years, right? And do things look similar, different, right? If you see that, then doing this shows a pattern that, again, within the statistical variability that we are dealing with, because we are still talking about an asset, etc. And the pattern is there, both visually but also mathematically, because you can average this cycle. This is one of the things I did. I sum them together like this, right? I average them, and then I say, do I see a pattern? Because if there was not a pattern, by summing them or averaging them, the pattern will disappear. But the pattern is there. Now, there are times where it's less clear because there is a lot of variability. And then there are times where it's mostly the most clear. The most clear actually is the top and the bottom. When you average it out, that is the place where there is least uncertainty. But for us, is the most important thing, because really we are interested in what happens, of course. This is why I do this every week, moment by moment, also because we are coming closer to a very critical time, that is the bull run. But in general, our understanding, the understanding that we want to focus is the cycle, right? And the cycle, um, maybe this is a review for some people, or maybe you never heard about this from me. It follows a very precise pattern. So we go up exponentially for 1 year, we go down exponentially for 1 year, and then we stay close to the support line for 2 years. So that is another thing I hear all the time. One day we did videos like that addressing misconception, but I don't know if I need to do like an AMA where people come in and start to ask questions. Maybe I prepare ahead like a long list where people have time to compile online. But I don't know if it helps, because people will come back anyway. And even if you tell them, look, we answered that a few weeks ago in the AMA. There is videos where we address all the misconceptions. But one of the misconceptions is they say, well, the power law is not useful because there are these huge big variations. The price can be there, it can be over there. Yes, sure, it's a general trend, but it doesn't tell me anything. First of all, it tells you a lot, because imagine we didn't have a trend, then it could be anywhere, right? It's not like a range of values around a general trend, and this trend anyway, the ups and downs cancel with is the real trend. So if you're interested in the long-term trajectory, this is all what you care. It doesn't care about the up and down, and particularly for the hodler. If you want to know how much your Bitcoin will be worth in 10 years, this is all what you care. Everything else is useless and meaningless. But again, people don't reason like that. Right? They are fixated about this huge variation. It's not that it's a fault of the power law. It's what Bitcoin does. Bitcoin does this huge variation. The beauty of it, though, that even that in Bitcoin is not random. It's not that there is. It's imagine the price was a bunch of fuzzy dots, right? Where anytime it could go from right now, we are the bottom is 35. If you draw, there is no, unfortunately, there is no a line that you can draw, like there is not a power law that say, oh, that is the top power law, right? But you can draw one that covers most of the variation, right? Like this one, if we did it right now, we, in fact, actually, it's an interesting quantity. We go from 41,000 all the way to 177, right? So most of the price, first of all, if you're thinking about all the possible price, when people talking about $1 million God candle and all kind of stuff, it tells you that it's very, very unlikely the price is going higher than that right now, right? It's still something, it's still some knowledge. It's not zero, but also that it's not really the right interpretation, because Bitcoin does very precise thing. And, before the bull run, we're supposed to be in this green area. This is why I highlighted this green area. Most of the time during these periods before the bull run, look at this, we stay in the green area, right? Sometimes we go above, like here, but then the price corrects. So it's not even correct that you can go all over the place like that. We are much closer to the bottom, and you can even show it mathematically. That is exactly true, but most of the time we spend it here during this time. And so it's a very precise pattern. In fact, there is even predictive power. Like you see how here we had a correction once we went up. I don't know what this was associated. We know very likely what this is associated. It's the ETFs, right? The ETFs had a big injection of price that increased the local liquidity, didn't do anything to the global liquidity, but increased the local liquidity. There was a lot of FOMO. Look at what happened. It reached the power law and it corrected, and we have been in this regime of price correction since March, basically, middle of March. And this is what the power law wants to do, because if it is a true pattern in Bitcoin, it tends to correct once there are large deviation from the corrections. There are this exception of the bubbles where the correction are still correction, because you can think about the bubbles as we go up. We try say, okay, I'm tired of this power law stuff. Let me do something crazy, and it goes crazy for 1 year, and then it comes back because it wants to go back home, right? You can have so much of crazy and drinking and partying and having fun, and then you want to go back home. That is the story of Bitcoin. So that's what it is, and you should learn it because it's the truth. Anyway, so this is how it goes, right? 1 year up, 1 year down, and then we stay on the power law for 2 years. And look at these patterns. Look at this pattern, right? Somebody was saying, "Wow, it's not regular." It's not regular. It's one of the most regular things I ever seen in any asset ever, right? That covers all the different aspects of Bitcoin. Look at this. It's all the peak. Now you can argue that, say, oh, but this was the real peak. No, because again, in science, you always go with the simplest possible explanation. If I see a peak there that happened when the other ones are, I'm going to say this was the real peak and this was an anomaly. It was an early peak that was driven by the FOMO due to COVID. This is COVID. There was a lot of stimulus checks, a lot of liquidity moving at that time. Governments were printing like crazy. They pushed the price up. It went too far, too early. It was a correction. It still wanted to have a peak where it needs to have one. It had a peak, and then the price went down. Much simpler interpretation, consistent, coherent. You don't ever make things more complicated and adding additional parameters if you don't need to. That is the beauty of science. It's always the simple. There is a name for that. Occam's razor. Go always down to the simplest possible explanation. And this explanation, look at this. It's very coherent. So this is the other side, right? I did the same thing where you understand how it works, right? In this case, I went 8 years back, right? So this is, instead of being, so this is 18, right? Because we go back 8 years. So instead of 24, it's 8 years in the past. So you see this, how everything happens in this pattern, very regular pattern. Everything seems regular if you compare where we are right now with where we were 4 years ago. It looks kind of the same almost, right? It looks very, very similar pattern. So in one end, everything seems happening exactly like it was happening before. Nothing is strange, we are not too early, not too late, because the way I say that, right, probably you can follow me, even tell me what you think, right? It looks like, of course, it's never perfectly the same, but like kind of here, you can say it's kind of similar to that. We went too far. It was a correction. We're still going through this correction. There was a correction. What happened? The cool thing, of course, I don't wish it because it was a bad thing, but it almost needed like a reset, right? There was this reset. That reset almost worked like a spring, right? It actually energized the price where we had all the right conditions to create a bull, right? We will see in a moment when we talk about liquidity that unfortunately we are missing that. So everything else seems almost perfectly a copycat. Now, if you go even more back, now you say, oh, here there is a violation of the floor. This is really, I should draw what we consider the floor, that is basically 60% deviation from here. This full model is trying to do everything at once with one single equation. So it's kind of an approximation, both of the top and the ceiling, of the floor. So it's kind of a visual aid to tell us where we are. But the more scientific way of doing the floor is calculating the 60%. Right? So if you have a 60%, then you see that it's all basically never violated. And I can adjust here. If you go to the bolt, what did we use here for this white line? This is the past cycles. Yeah, past cycles. Multiply, fill the graph, lower band. Okay, let's use. Yeah, you see, if I use 60, so this is 0.4 times the straight line in the middle. That means about 60% below. So you see how it touches this bottom here. COVID, in that case, COVID didn't penetrate. They tried very close, but they didn't penetrate. But, it's a little bit arbitrary, right? Is it 60%? Is it 5%? It just, probably the best way will be to do it with cost of production and then smooth that curve, because at least it's a meaningful thing. But even with cost production, you will have to assume a cost, an average cost. This is not how you use these things. It's incredible that there is a point of reference that gives us a statistical, meaningful place where we can say very unlikely the price goes down below that. So everything else looks, I should do the same thing, creating straight lines like this here so you can see where the real bottom is. But we know already, right? You can actually look with your eyes. It should be something like here. And for these guys here, see, we were coming close to here. This was the bottom. See how fantastic it is over many, many years. It's incredible, right? And so if you shift it by 8 years, you get this. And in that case, we were much closer to the bottom. Right? We were almost like textbook. This cycle was a textbook of example of how these cycles should be, but they are still extremely regular. Look at this; they're almost like a copycat, right? A copycat of this, right? And this, even if you had a double top, very similar, very similar. So we are expecting something similar also, right? Because can it be different? Yes, it can be different. But so far, there is no reason to expect something different because Bitcoin has been so regular in its overall pattern in the cycle. Now, the overall pattern, it's at a level of certainty that cannot be the same level of a bubble because the power law has been valid for 8 orders of magnitude, has been valid with using thousands and thousands of data points. In fact, it makes even stronger the fact that notwithstanding this huge crazy bubble, we still follow this general pattern. That people don't realize actually how that shows even more how powerful this power law that is there in the data needs to be, because even with the presence of these huge bubbles, we still have a power law that is crazy. So, you know, the bubbles are only three examples. Now, there is this other guy with which I had a debate, not debate, discussion line. Sometimes I am a little bit too blunt, but I like the guy because he's clever and he's probably like kind of little, I don't want to say savant, but it's one of these people that don't have really formation in how a physicist will think about that data, or engineer, etc. He's an economist, but he's talented with math, right? Um, and he made a variation where of this full model where he had some kind of further equation, and he stretches this equation where because of this additional parameter, if I add parameter, I can fit anything, right? There was this famous scientist, von Neumann, that was a genius, and he was actually arguing with my countryman, one of my heroes, Fermi, and he told him, because Fermi was trying to understand these physical phenomena, so he added all these parameters to understand this complicated physics phenomena, and they were 4 or 5, wherever they were, and von Neumann say, yeah, with a 4 parameter, I can fit an elephant. And with 5, I can make it his trunk wiggle too. To say, by the time you add all these parameters and you understand how the math works, you can adapt to anything underlying. You can change it and make it fit anything. And so he added this further equation where you can fit also. I look at vacation, I try to reproduce it. It's actually kind of cool because you can actually do that and get this additional bubble, but at the cost of adding this additional, it's basically changing the periodicity of these bubbles, and in that way an additional bubble comes in and it can fit this one, not perfectly, quite badly actually, but it can, right? And I was a little bit impressed by that. If we had many other bubbles before that, like say we had 3, 4, 5 bubbles and they were all spaced in that way according to his equation, then yes, right? Then, wow, I will be the first one to say, wow, Leo, his name is Leo. You did something amazing. I didn't think about that. But you are incredible. And I will steal his stuff because that kind of plagiarism with recognition, right? You always have to say, I got it from him. Like, when I do the spiral, I always say, thank you, rational root, because you did this. I improve it by adding the power laws, or I did this modification, but if an idea is good in science, you steal it. But what you do all the time. You improve it on it. You build on it, right? All the science is built on other people's contributions. That is fantastic. I don't mind when people take the power law and give me credit and build on it, right? It's fantastic. But I think the first bubble was an exception, was some kind of anomaly, because it happened before the halving. It's not at the right distance from the other ones. So I usually don't include it in my model. But hey, if there is some evidence that shows otherwise, then this is what you do in science. You revise your model. You don't revise it because revising it all the time shows that your model is not good. But if there are major improvement in our understanding, it's perfectly allowed to improve your model. That is one of the things we do in science all the time. Right now, I'm treating it like an exception, because the scientific idea will be, the motivation will be, okay, these bubbles are different because they are all associated with the halving, and so their nature is going to be different. This is why they happen every 4 years, and this one was an anomaly because it happened before. It makes sense. I could be wrong, but it makes sense. It doesn't matter, because you can see it. There are still these incredible regularities. We can assume this regularity happen in the future. Now, if I am wrong and it's right, like for example, by doing this modification that he's doing, is anticipating the peak. He's saying it's not a big deal. It's just a variation on the theme, right? I stick to my interpretation. My interpretation is that the cycles are going to repeat in this very precise manner. I stick with this because it seems the simplest possible interpretation. That the peak is going to be close. You see, every time it was, if you look, I draw it here, it's close to the end of a year, of each year of that 4-year cycle, right? So this was a little bit early. This was a little bit later. So even there, right, in his theory, we should be all the time a little bit earlier of the time. I don't know. But you see, this one was not a little bit earlier. This was a little bit later relative to the other one. So, his theory already broken. But these are minor things. I think there is not a theory where the most scientific way of saying this is that there is not a theory of where the tops are going to be. It's just it's noise, right? It's the statistical uncertainty. It's already amazing that we can say in an area, right? You can identify an area, plus or minus, like everything you do in science. You should, every number that is quoted in science, it should be always quoted with plus or minus, right? Because there is always some uncertainty in that number. And maybe I should start to do that. Maybe I should start to add like little gray area where you see where the uncertainties are. But sometimes you clutter the graph when you do that. So, but always imagine there is some uncertainty there, right? And this is what it shows here. There is some variation and some uncertainty, and so it's not 100% precise. But if we can know it, where the top is within a few months, it's already amazing, right? And I think we can. So this is why I put the top here are at the end of the year of 25. And right now, I would say everything shows we are still on the path. We are still in the right direction. Again, if you compare it, particularly if you compare with where we were in the previous cycle, there is no indication that anything is weird or strange. Now, historically, this is why I put this line here. The bull market again starts, and this is why I use end of the year, because it's the simplest, most consistent thing, given the uncertainty, right? Given that there is always few months of uncertainty. So let's use the end of the year. It's kind of easier in that way, and add plus or minus few months, right? Could it be November? Could it be right? This month is basically finished, so it's not October. It has to be November. Could it be December? It could be December, right? Usually, it's never January. So if you go and look at where the bull market starts, every single time we have this clock, we come up with this clock. See, here is the clock, where every component has a time. So the start of the bull, we call it 9 o'clock, right? It's 9 o'clock. And 9 o'clock basically is 1 year from the top. Again, should I make it there? Should I make it there? It's making the story simple. This is how we like it. We like it simple and consistent. And then always add a little bit of uncertainty. Like, how could you define the bull run? Like it's difficult, right? Because you could say, well, it looks flat here, then it starts to pick up pace. Yeah, our eyes tell us that. Can we measure it mathematically? We could measure a certain level of deviation from the trend, something like that. We could do it, but does it really matter? No, because to us, it's more a question of knowing more or less where we are, right, in terms of the cycle, in terms of the behavior. I show you in a moment, and we can monitor the returns. We can monitor the returns when we know, well, we in the last few days or few weeks, the returns have been very consistent, much higher than previous returns, right? So if you did it with the returns here, you will see all these very consistent, almost constant returns. When all of a sudden we go much higher, and will be also very constant return, but will be high. And this is why in this case, well, the return is something that is flat, basically. So it will be constant around 1, right? Returns is price yesterday over price today. Oh, sorry, the price today over the price yesterday, right? A ratio. So if the ratio is 1, means you didn't go anywhere, right? So this will look like the returns are basically 1, right? Now, when we are along the power law, the returns are about 1 point right now. They were higher in the past. We go always down. Right now we are about 1.0001. That means 0.1% a day. This is what we make by staying on the power law. And so during times of the bubbles, we go up, and that returns are much higher. And this is why, and they are constant. So if you have constant returns, you go exponential. So most of these bubbles look like exponential. Much more precisely when we go down. See how they look almost like straight lines when we go down. This is a sign of exponential. This type of chart, if something looks like straight, it's an exponential. It looks almost looks like straight lines when we go down. Now here there was a drop, a very fast drop, but in general they look like exponentials. Very precise, much more precisely when we go down than when we go up. So this happens usually at the end of the year, right? Again, to simplify things. In this case, probably again within that uncertainty. Look at this, right? This was October, end of October of 20, right? So it actually picked up fast, and so. But for us, this is going to be, we are going to say. In fact, you see, by the time it was December, was already picking up, and mostly because we are saying COVID push things faster. So this is why probably we had a early bull run, and then it started to go really fast during this time. There was a correction, etc. But we are not there yet. We are going to be. See, in fact, as we move more along this line, you will start to see, because okay, where we were, like this is where we are right now, right? Yes. It doesn't look like here. This is just for comparison. It's kind of interesting, right? Because how will you know if a bull market starts, right? Will you see? One thing is, that is one of the cool things about this chart, right? I also want to show you these kind of things, right? So if you are here, will you know that you are in a bull run? No, right? Because there were times where we went up, and we stayed down. We stay more. See how it was following the power law, right? Kind of parallel to the power law, and then we drop again parallel to the power law. We don't know, right? We go up. Oh, okay, we are going up from where we were before. Is this the beginning of a bull market? You will not know, right? And right now, you see, we don't know. Imagine we are here. Imagine this was present 4 years ago. We will not have a clue, right? Maybe Giovanni 4 years ago will have told you, oh, guys, we need to wait here, and then when the bull will start. Yeah, that is what the theory says, but the bull started a little bit early, right? Because there is always some uncertainty. And then when will you tell? Maybe another, not maybe, but actually another, um, you know, milestone, let's call it like that, during the bull market is to cross the power law, and crossing it not just like a tentatively like we did here and then having a correction, but you see here it did it pretty aggressively, but then there was a correction. But what you will have said here is, will say, no, this is now a uh, real bull market, because we are not anywhere close to 9, right? We are somewhere else in time, right? Probably because this is 12, this is 3, maybe it was 4 or 5. Actually, good idea will be to put a bunch of numbers here, and you see it all the time with time, right? Where the time is. You should do that. That is maybe like a line with all the different times. Bitcoin time, we can call it Bitcoin time. So maybe it was like 5 or whatever. So it's not the right time. It cannot be the cycle. It's not that the cycle was broken or started early or whatever. It was like an anomaly, and it corrected itself. But here, because the bull run could start any moment, if we see a very strong and decisive breaking of a power law, maybe that is a sign, right? That is a sign. And this was a sign here. Here it happened a little bit later, the breaking of going across the power law. Here it happened here. Okay, so it's a little bit variable, but it's a good sign that we are along the bull run, right? But again, you see how the pace started to pick up here for this year and started to pick up here. You see, this is why I say, okay, this looks a good place where, in terms of the periodicity and making everything regular, because science likes regular, right? And if it was completely off, then it will be completely off. But given the uncertainty we have, this is a good point of reference. It makes sense. And so if we use this as a point of reference, this is where it's going to happen. And we are in this situation where we don't know, are we going up like that, very soon? Because in the next few days, when, if we analyze this next week, and trying to do this every week, it should start to look like much more like a bull run. But, probably we don't know when was that. What was this crossing? Like if you were here, right? Where would you say the bull run start? Maybe when you went above this flat region, right? Even before reaching the power law, that kind of, it's beginning of November, right? So yeah, you will start to say in the next few days, whoa, this it smells like a bull run. It doesn't smell like bullshit. It smells like a bull run, right? It is a good smell. But yeah, this is what happens, right? And then, as a further confirmation, a few days later, this was November 12th, we had the crossing of a power law, right? And we could have known, yes, we are in a bull run. It's the right timing. It happened a little bit earlier when it's supposed to happen. Fine. Same thing here. Once we see the crossing of this power law here, that will be a good sign, right? That we are in a bull run. But everything looks good. The only thing and everything is the same for the people that always ask me, even after I repeated like a million times, what is the top? By the way, here the projected date, it's simply 500 days ahead. It's not because in the beginning, this is all what I had, so I was projecting as far as possible, and then we reach the top, and now we are beyond the top because it's going to take less than 500 days to reach the top, right? Basically almost 1 year now, 1 year and 1 month. It goes beyond. I need to fix this and change the name and to say something else. And I should add always a projection for the top. The projection for the top is close to 200, 200 something. And so this picture stays the same like we did before. The thing that worries me is this. Okay, so let's discuss this. It worries me because everything looked great and I look like a prophet and it felt good. But this way where you laugh a little bit, because in one end, right, we are trying to predict so many things and we trust, not trust, but we try to understand the power law. That is our base and our science. And the cycles, so far all the cycles seem so regular. We don't have any evidence that the cycles are broken. But what I was saying for many weeks, I was saying, hey, I'm going to make a joke that I'm going to do what the TA people, that is, drawing lines by hand, etc. My son does that because he has also his reviews, and I'm just allowing him to do it. I don't want to go and say, because he studied this stuff himself, like he was trying to trade for some time, so he learned all these things about TA, etc. And I'm against TA very strongly. So TA is more like astrology. You draw lines. And say, oh, it's mostly like the way to understand this line is always like a visual aid because it allows you to visually to see patterns. But humans are very good in picking patterns that are not there. This is why we use mathematics, right? Because we try to avoid to pick patterns that we think have a meaning, and then the meaning is not there. Like, think about seeing Jesus on a toast or seeing all kind of different creatures on the cloud, right? Humans have that ability of picking up patterns when the patterns are not there. And maybe it's a bias that we have because if I see something fuzzy over there in that bush, it's better see a face like an animal face and err on the side of um, caution and say, oh, that fuzziness there that looks like a face, it's a face, and it looks like a tiger, let me run. Because if I am wrong, what happened? Okay, I had to spend some energy to run away. Of course, if you do it all the time, you get neurotic. This is why I think a lot of people are neurotic in modern times because we react to so many stimuli all the time. But in when we lived in the savannah and we were monkeys, it was a good survival thing to see faces, to see pattern, even when the pattern were not there. Um, it doesn't always, it's not always a good thing in modern life, right? But we have math to help us, right? This is why I draw this line and they say, looks like we are going down here. And the same thing was happening with the liquidity, where we follow this pattern here and they say, hey, let me do like the TA thing of drawing a line, mostly like a visual aid, right? But I was joking that I was going to predict something. Okay, it was just a good guess, right? Now we know that guess doesn't work because the price did exactly the opposite of what liquidity does. Because okay, so if you follow my previous videos, what this model does, this is a liquidity model. Basically, there is a very complicated, it's not a power law, there is a much more complicated non-linear relationship between global liquidity, and you can define it like you want. I'm following all the different M2s of different countries. I'm following the bank money. So I'm adding together many different quantities that represent global liquidity. And then you can see from the graph, you plot Bitcoin versus this quantity, there is some kind of pattern. And you remember, you can fit any pattern. That's why the guy was joking, but he was right. There is something called the Taylor expansion, where you add more and more terms to your expansion, right? You start with a constant, then you add a line, then you add a square, then you add this cube, it makes four, and more terms you add. I can literally reproduce every little bump of Bitcoin, and then you will be amazed and say, how did you do that? Yeah, you can do it and it works. I just add more and more terms. The problem with that, if you now use that as your model of what Bitcoin will do, you can extend it to the future, but it will give you some crazy answer that doesn't have anything to do because it's fitting more noise than data, right? If it was like a very simple pattern, like a straight line, then you will not need all these term, right? This is why we love straight line. This is why we draw the power law straight line, because there is not much to overfit that. It's just one single parameter, right? With slope, basically. Um, but if you have to add more and more term, you um, you go in the risk of modeling noise versus the signal, right? Maybe there is a general signal that is this curve, and that curve will continue, but you risk to start to model more and more noise. So you usually what you do is called a polynomial model. Basically, I went all the way to the fourth power. And why the fourth power instead of the fifth? Because, well, you can also see the error, between your model and what you're trying to reproduce, and the error was small, because the error will be if you add the fifth term, how every term has like a little constant, right? How basically the contribution of that term. And if I added more bigger like fifth and sixth, etc., these numbers started to become smaller and smaller. So you make a compromise and you say, well, okay, I'm stopping at 4. But you see how it starts to be so much more arbitrary than what we do with the power law, where we say, oh, wow, it looks like straight line is a straight line. And if somebody say, well, but I could make that straight line a little bit better by bending it, etc. No, unless there is strong evidence to do that, you don't want to do, because you're defeating the purpose. You want to stay with the simplest possible model until the model works, and very strong evidence that you need to add a taper or add something else. With the power law, there is no evidence like that. So you want to keep it simple. But I couldn't do that with the liquidity, so I had to make it complicated. Right? Sometimes you make it complicated. And I tell you that because I want you to take this with a grain of salt, right? So it's a good indication, tell us some information, but we should not, you should not base everything on this model. But the model gives us some insight. One of the insights is that if a price, the white line is the price, is above the purple line that represents, see, it's not the liquidity itself, it's the fair value price based on liquidity. What the price should be if you rely on this relationship between liquidity and price. So the price, according to that relationship right now, should be 42,000. And so if the real price is above, means that we are overvalued relatively to the liquidity. So basically, in other words, you can say there is not enough liquidity to support the price. And then, see, this is what you do. You go back in the past and say, okay, under this interpretation, what can I learn from the chart, right? One of the things, and now you can look for patterns, but you see, you do it under some guidance from the math, right? So that is okay. That is how you do science. You go back and forth between your intuition and the math. Then sometimes the math goes against the intuition, so you trust the math, trying to interpret the math and understand the math, and then you say, aha, my intuition was not correct because I didn't understand this, I didn't understand that. And then you update your intuition, right? Now you get a better intuition based on what the math tells us. And then you go back, you do some more math, you go back and forth like that. When I was teaching physics, I was saying to the students that this is how you do progress in science. It's like two legs, right? You have the math that brings you so far when you're trying to understand the math by updating your intuition, building a physics intuition, and then you're updating the math again, and you do this and you go forward, right? So our intuition tell us that maybe areas of green and areas of red are significant, right? So notice where the areas of green are. So for example, all these areas of green always happen before the bull run, you see? So it looks like uh, the bull run needs to have enough liquidity available to happen. That is an interpretation, right? You can interpret it in many different ways and try to understand what it means, but that is my current interpretation. That it makes sense that the real price is actually below the price suggested by the liquidity, because the price is kind of suppressed when we are here. It's not suppressed, we are going up, etc., but we are not doing it in a manner that is not supported by the liquidity. There is plenty of liquidity. Then when the crazy bull market start, you see how this gap, this became a smaller gap, right? So basically the white line tries to go above the purple line. And in fact, look what happened at the very top of the bubbles. This is when things invert, where the FOMO, the craziness, the herding behavior, people became like sheep, or like even more sheep than usually they are, and everybody goes crazy. Everybody wants to buy. When you buy, oh, did you hear Bitcoin? The grandma is coming in. Uh, Zia Maria. Zia Maria is like Aunt Mary, in Italian. Zia Maria comes in and he wants to buy some Bitcoin. Everybody wants to buy some Bitcoin. And then what happened? Right? The liquidity is not there. The big players, they are already left. The big players leave the market. This is the liquidity is mostly driven by bank. The big players have enough. They got enough returns. They said, you know what, let's leave a market, right? We leave a market, and everybody else continue to push the price up like crazy, and then it crashes, right? So these interpretations are not like stories, are interpretation, but it's okay, right? Now, if you wanted to do this even more scientifically, I will go there. I will try to break down. I will look at who left first, etc. You can go deeper, right? This is what I was saying. The mathematics gives you even more support and understanding. I didn't do that. I am in the process of doing that. I want to go deeper, understanding liquidity better, maybe breaking down in more details, etc. But the general understanding right now is consistent, right? You need to have liquidity to support the bull run. When we run out of liquidity, it's almost actually cool because this chart almost gives us like a warning, right? It's an early warning system that tell us, hey, we are not really quite reach the top, but hey, get ready because things are really going crazy here. Liquidity is leaving the market. This what is happening, mostly FOMO, right? It's a FOMO indicator. So look at this. It happened. So the peak was at the end of the year, right? It was kind of December 15th, where is when the peak happened, 17. But early on, all the way in September, okay, or maybe if you want to use this one, right here, in October, we already knew that we were in this crazy bubble territory. So it's really cool. A few months ahead of time that the next couple of months are going to be crazy. You can still play along, right? Because we have indicators that can pinpoint the exact top, but you have an early warning system, right? So to apply this knowledge, and you can see this pattern is not just one time, it happens all the time. In fact, the only exception, so it's an exception that kind of confirms the rule, is here. And this bubble, you see, this is why I call it an anomaly. It was not supported by liquidity. There was not enough liquidity there, but we had a bubble. But you see, this bubble was like what, $30, right? So it's easy to have a $30 bubble. The market cap was very small, all driven by FOMO and just crazy Bitcoiners at the time. Then something that takes $1 trillion, right? And if it goes, supposed to go to 3 times up at that time, so it will be 3 trillion, right? Or 4 trillion, whatever it is. It's much more difficult to push that kind of market only by FOMO, right? So it crashes. So, and also in time, start a bull run based only on FOMO and now have the liquidity. So this, while in previously, let's say everything looks great and it looks exactly like the previous bull run, and if you look at similar times, this doesn't look similar. So this is a little bit worrisome, and I liked it when it was going down. There was a price correction. See if this pattern was happening by the beginning of November, we should have seen a reverse, right? This will have turned green. The purple line will have been above the white line. If you continue to do the same, the price will be around 56. It will have been cool, right? Because we could have been buying. If you do DCA, you could have bought cheap Bitcoin. It could have maybe even continue along this line and go all the way maybe to low 50s, and then the liquidity could have been, and then we could have had our bull run starting, right? It doesn't look like that, so I don't know, because when you have something like that, this is when people say, what happened if this breaks? What happened if that breaks? You do exactly what we are doing right now. You use the past as a frame of reference to tell that something is different, and then you look, you monitor, you check. This is what we do. It's like driving, right? You know that it's supposed to be a road, and then the road stops, and now you're off road, and you're still keeping the lights on and trying to see if there are trees in front of you, right? And so you don't smash against the tree, right? You're still navigating whatever territory is in front of you, but you keep the lights on, and you're trying to understand things and use the information we have as a frame of reference. So I don't know. It's still possible that these two things revert. This goes down, this goes up, or maybe this goes up like crazy, and this also goes up, but it catches up. I'm just worried that if there is a bull run and we start to go up very quickly, and the liquidity is not there, when this crashes early, we don't really, maybe we don't have a bull run, or maybe we're going to have a late bull run. I don't know, because it's all uncertain, right? All what I can tell you is what we had in the past and what is happening right now. Now, I need to update a little bit all this stuff because I want to go a little bit deeper. I want to understand what is the role of each component. In theory, if you go here in the indicator, there are all the source of all the different contributions. You see, I use this, and you could turn it off and see how that affects, right? So if I take my money supply, so maybe see we are giving, if I take off that and you say, whoa, there are even less liquidity, so maybe I'm giving too much weight to Japan. So there are mathematical way to calculate what the weight of every single component should be. See if I take China money supply, what happens? Wow, even more, right? Even more like, oh, the model kind of breaks because it needs that liquidity. So maybe part of the limitation of the model is that I'm giving everything similar weight, and maybe I should not, right? So I'm going to improve this model, but right now it's better than nothing. Right now, there are some indication that we're kind of not ready for the bull market. Then usually what I like is also to look at this chart. Okay, this is the price. We can add the power law model, but it's just as a reference. And then we have here this one that basically tell us the different type of scenarios, right? So here this boundary represents, let me zoom in, represents the year ahead, right? So when the bull run will start and when will end, right? This is the peak. And these are the different type of returns. Remember what returns means. It means price today over price yesterday, right? And if it is one, like here, this yellow line, that means you're not doing anything. You're not losing or making money, right? That is the reference point. So if you are above it, means it's a good day. If you are below that, it's a bad day, right? Notice how these bad days were associated with the bottom, the good days are associated with the top, right? What these are instantaneous returns, like basically, and you see how much variability there is. There is craziness, right? So this is why, yes, it's still a random asset. There are all this variability, but there are patterns, right? Recognizable patterns that we can extract using math, intuition, math, right? We go back and forth between the two. So our intuition, the math says, first of all, if you take an average of these returns, you start to see consistent patterns, right? Very consistent. I don't remember. We can check, but in this indicator, you can choose the average, right? Right now we are averaging over 200 days. We are averaging the return. So this is what this white line represents. It's you're looking at 200 days. If you want to look at 6 months, you need enough time to make the averaging meaningful. But you can try different quantity, right? If you want to show more local changes, you maybe want to average over the last 3 months or even last month. If you want to look at more cyclic pattern, maybe you want to average over hundreds of days. But anyway, so right now we are doing it over 200. And notice is saying, well, we are kind of in a losing pattern over the last 200 days, right? Because we were actually going down. Yes, we are going up right now, but in average, over 200 days, we were going down. And what this blue line represents, that is, if we were on the power law, we were going to make this money, like 0.1% a day. That is what the blue line represents. There is actually a formula that we can use to draw this line, and that line represents the average return due to the power law. Actually shows the power law is not just some line we draw through the graph, like I don't know what people mean with that. You just drew a line through the graph. We don't even understand how we drew that line, but this shows you, because the returns, many times in finance use a return to actually take off trends, because now you're looking at the changing trend, right? So the changing trend will look like up and down like this, but the trend is so powerful that it's there. The trend is the power law, and you see how this is the diminishing returns, right? So there are two types of the diminishing return. The tops are becoming smaller, but also the daily averages, the daily returns are going down. You see, in the beginning they were crazy. We were making like 1.01% a day. Do you know what that means? If you compound it over a year, it means a lot of money. I don't have it in my head, but like, 10, we can do it. Let me do it very quickly, just for fun. Do you know how you do it? You take, I show you, I give you a formula. You cannot see my computer, but just take whatever return, right? In this case was 1.011, whatever it is, right? Then you take, if you want to know the compounded value over a month, you take the power of 30. If you do it over 1 year, you take the power of 365. The power of 365 of these crazy returns, it's 54 times. 54 times. So imagine to be at this time, and then you invest $1,000 at the end of the year, you have 54,000, right? You invest 10,000, you have 540,000. That's why it was crazy. Bitcoin was crazy in the beginning. And you see, this goes down, and the average return oscillates around it, right? Because during the bubble is smaller, during the tops is higher, during the bottom is smaller, the average return. But you see, it follows the general trend of the power law. These average returns follow the power law. You see how it's bending down, and it's becoming a bending that is a little bit gentler. It looks now that means we are still going down, but slow. Right? It will take about 20 years before we go down to 20% a year, because remember I told you this is the current compounded returns, about 0.1%. If you do the same thing I told you just now, you going to my calculator. This is how you will write it. We'll write it as 1.00. There are two zeros, and then you will have 1. That is what we make right now, 1.001. Then you take the power of 365. Why 365? Because is that is the average return, and you compound it over 1 year. That is 44. 1.44. That means 44%, about 44% a year is what we are making right now. And you see, I indicated here what will be necessary to reach different goals. If this green line here indicates what is needed to reach 200K. So once the bull starts, and this is valid if a bull run starts soon, within 1 or 2 months, right? If by the time we reach, I should extend this green line here in this region so you can see where we need to be, right? So in this period of 1 year, we need consistently to make about 0.33. So this white line needs to climb, needs to be above this green line, and then stay there consistently, because remember, it's going to be an average. So if we add smaller value in that, we need to compensate by being higher, right? Now, if you take shorter averages, it doesn't need to be much higher, but it will be also much more weekly, this white line. So maybe you want to take a couple of months, and we are going to do it. There is no point to do it right now, but as we come close to this, we can look at maybe the last couple of months and check all the time. Where are we? Where are we in terms of returns? Are we coming closer to this value, because we will need to keep that value going for about 1 year to reach 200,000. In fact, we can always try to project ahead. Let's do it once we start to cross this line, or maybe we are close to this line. Maybe that by mid-November. We can always look at like, for example, right now, right? If you use 200 days, probably it's better to use the last 2 months or something like that. But say we use this particular day, we value. Let's do it. Let's do it. Let's do it. Why do I say we can do it? The only reason I don't do it is that I will need to reset the chart. But let's do 2 months, so 60 days over the last 2 months. So that will mean we will need a little bit of time, right? See, this is what happened to the chart, but I can fix it. Okay. See, now it looks a little bit better, right? Because we actually went a little bit higher. This is why I have this white line, right? I have this white line here. Let's see what we are doing. That is 1.0016, right? This is the tip of the white curve. That is what we did in the last couple of months. We were at 1.0017. So imagine we continue to do that. Okay, it's a little bit affected by the fact we were going down a few months, right? But imagine we start steadily going up, then that number will represent the growth. But just as an exercise, if we took that value, 1.0017, is the current value over the last 2 months, and we do 365, then it's 85%. So we will go 85%. So imagine right, what is the price right now? It's about 65 or whatever it is, right? It's 66. So you multiply that by 66,000 and you get 122. So we need to go much faster than that, right? This is what it's telling us. If we want, if we went up like we are going right now, and it's a little bit not perfect because we are not going up consistently. We were actually going down. So we need more information as this thing goes up. But you see how it works. You can take the last couple of months. If we went up consistently, then we can extrapolate that to 1 year and say, where are we going, right? As we go here, we cannot extrapolate more for 1 year. We will have to use how much time is left for the top, right, where we think the top is. And so basically we were running out of time, as we come here. But we need to be very consistently along these returns, right? So it's almost like a predictive tool to tell us where we are going. Are we going to 200? Are we going to 150? And so on. So this I added for fun what we need to do to reach 500. So imagine we are here. We will have to be higher than that. See, sometime we go higher than that, right? When we had this very crazy. Remember when it went up so fast, when everybody was excited about the ETFs. So we actually reached for some time, right, that kind of returns. But then, correct. We're not sustained, right, for a long period of time. Imagine these gains need to be there all the year long to actually reach that value. That is 500, and then 1 million will be over there. It's probably very unlikely that we keep these consistent returns for 1 year, going 1 year. And we can look very quickly. Monster, I call it Monster. It's a Monster, MSTR, MicroStrategy. And so this is a MicroStrategy model. This is how Bitcoin itself looks like compared with MicroStrategy. MicroStrategy looks like it's going crazy in comparison with everything else. So it's called, again, if there is no liquidity for Bitcoin, there is maybe even less liquidity. Maybe all the liquidity is going to MicroStrategy. I don't know. I think it's FOMO. I think it's crazy FOMO. People getting excited, people playing games. Somebody's going to be hard because they're pumping this like crazy. Then at a certain point there will be a correction, and and a lot of people are going to buy there. I mean, okay, eventually will still correct, still go up, and so it's not that you're losing something. Uh, the problem is the crazy people that are leveraging these. I heard all the time, oh, I actually open all these positions, so 2 pair MicroStrategy, 5 pair MicroStrategy, 100 pair MicroStrategy, okay, whatever. I highly suggest you not to do that. In fact, I buy MicroStrategy a little bit every month, because we are not yet close to the top. Then I will do something else, but I would not put a lot of money in this because it seems dangerous, right? But again, all what I can do is give you the information. This is not financial advising, um, and so you do your choice. But yeah, this is a cool indicator because it shows what the model should be. This, if you behave normally, we already get a 1.3 advantage because it turns out MicroStrategy. This is why I made this model. MicroStrategy is basically like an enhanced power law. It goes like the normal power law is 5.8, 5.75, whatever it is. But this is 7.2. So it's like a power law on steroids, and you're already getting a leverage, but here you're basically there is a disconnection between what the model says the price should be and what it is. So be careful, but I think this is what it means. I would rather buy here when MicroStrategy is undervalued, right? This is why we do these charts. But it's up to you. You make the decisions. All right. So I think we cover a lot of stuff. Like always, it's never like 20 minutes. But at least we go more in depth and we're trying to understand the market in a way that maybe other analysts cannot show you. So I'm going to take some questions if you have any questions. So go ahead and ask question if you feel like to ask any question. Otherwise, because Joe, I'm still curious to understand more the peak at bottom so well. It's like a cheat code and a true genius here. Saxon Smith always is fascinated by the indicator that he has in mind. I need to make that indicator. Basically, what he's referring to. So maybe that should be. It's very much related to this indicator where we use the returns. So basically, you can do something similar with that indicator. Where is it? The return indicator. And by the way, if you are curious, let's also show you. This one is the Luxalgo clock. Let me here. Yeah, this is the clock, right? This is so kudos to the rational root to come up with this idea of drawing it in a circular pattern. So the white one is the price, right? But my addition is to add the two model, right? So the blue line is what we call the full model. See how it catches all the tops, right? The beautiful thing about having a model that now you can extend it, right? You can extend it to the future that you will not be able to do just with price. So it was kind of incomplete. The beautiful. Why do you see this beautiful pattern? Again, you do it and then you don't realize it. What we are trying to show is it's because of the power law, because it follows the power law. The price follows the power law. So there is actually a name for this. It's called the power law spiral. And you see this, I made it into a clock. This is the end of a clock. And this is where we are, right? Close to 9. We are coming closer and closer to 9. And then the bull run should start. But I was telling you, if we can find the liquidity stuff, not liquidity, but the volatility stuff, too much stuff open. Yes, this one. It's very similar. The indicator that we were discussing is this one. It's very similar to this one, where basically if you take away returns and you take the difference relatively to the power law of these returns, when you can almost pinpoint the top and the bottom. You will have to average over 1 year. And it's even more clearer if you do it in terms of slope. So basically, you can calculate the slope of a power law every day. So imagine you have a change in time, right? And you have a change in price. So now you fit a power law through a single day, that it looks like a crazy thing to do, right? You take the log of a change in price over the log of a change in time for each single day, right? So I will make that indicator. It's really cool. I show it in my slides often. When you do it and you take a moving averages, it's even more precise. It's incredible. It shows you exactly where the tops and bottoms are. They became, and they are very consistent. Very, we form like a support line at the bottom, and then you see this decay in the tops, and you can actually calculate what the decay is. So you can actually pinpoint with both the top bottoms and tops. So maybe that is the next indicator that we're working on. Anyway, so unless there is any question beside what you already wrote, okay. So that probably means everything was answered fully, and you're happy about the explanation. I make all the time that joke, even when we had a dinner and my mom cooked this very wonderful dinner, and we were three brothers. She had little lady. She had to deal with three crazy guys like us, plus my dad. So four guys, and we were eating, not saying anything. And my mom wanted some feedback, and my mom said, "So, did you like it? Was he good?" Nobody says anything. My dad will always say, "Oh, if the troops are not saying anything, the food is good." He was like an ex-military guy. So I'm going to say everything. So if the troops are not saying anything, then it was good, right? It was good presentation. All right, guys. I'm going to quit here because I'm going with my girlfriend out. We are going to have a nice Friday dinner. We are going to actually to a pub um, that is owned by a Bitcoiner. So we are going to pay our dinner in Bitcoin. We're going to do the Bitcoin standard life. It's a really cool place. We actually made a video a few days ago there about the power law. Hopefully, will be posted soon. Okay, guys. Have a nice weekend, and I will see you soon next week. Bye, everybody.